It's great to have you back. I know you've been cautious for a big part of the year, and I wonder if you think we just hit some wall of resistance once the S&P got back to that 200-day.
Yeah, Carl, thanks for having me back. Yeah, I would say it's part of that. It's also, if you look at a pretty good trading strategy for short-term investors, has been looking when the VIX falls at that 20 range and selling some of the gains there. You usually see kind of the fall off of a rally at that point. So, investors are looking, closely at those two items and looking at where, especially with tech valuations are. We've come down obviously from 2021, but we're still trading, in tech valuations higher than the rest of the S&P and the rest of the market. So I think investors are still looking at that. On the long-term range, we've talked about it for many times of what you can pick at the long term, but in the short term, I think there's going to be a little bit of a sell-off here.
Right. Are you in net? Are you getting ready to sell into any strength we get in Q1?
Yeah, I would say Q1, Q2, and the reason being is one, I think tech, obviously, they've done a good job in cost constraints and cost control. That's the one thing that investors are looking for. We've seen most of the announcement of layoffs, obviously, which are not fortunate things, happen within the tech sector. It hasn't really broadened out past that much yet. So I think that's a positive sign. But if you look into Q1, I still think there's more going down the pipe as you look at how budgets are being made for a lot of these companies. And I think generally, still the earnings question is in play here. We had, revisions that are still being revised down. The outlook for for the next year, and especially the tech sector, is still to be seen, especially seeing how the consumer does. So I would say it's more that Q1, Q2 range that it would be pretty safe for investors to start diving back in.
Delano, yesterday we were looking at IBM versus Snowflake over the last year. A year ago, they were both at about $100 billion market cap. And since then, which probably would have been surprising to many at the time, Snowflake has massively underperformed while IBM has created a lot more value. Who would you be betting on in the next year ahead?
As a growth investor, one, you have to look at obviously the difference with them. IBM being that stalwart standard giant for a while has been a value play for many investors for a while. That's obviously something that's been doing well in 2022. If you look going forward, as I mentioned, I still want to lean on growth going forward. I still like looking at Snowflake. Obviously, the valuations come down into more favorable range, and they're going to have to do things to perceive and grow during a time of interest rates being higher. And so that's an area where I would still look at Snowflake. Being a growth investor, I still think you have to wait a bit, but I would bet on Snowflake in the further term.
And part of this narrative has to do with, less so growth at any cost. And certainly some of the growthier names like Snowflake and others have improve their bottom line, and valuations have come down so much. Is the idea that you would bet on a Snowflake? You think that they are bottoming out, some of these growthier tech names?
Yes, and I think, they will bottom out. One, you have to watch, we're looking at what the bond yields done. Bond yields have come down, but they're creeping back up in the last five days. And so investors are starting to flight back a little bit towards safety, and we'll see, where that plays out in the long term. I do think they will bottom out. I do think earnings and profitability for a lot of growth names that were doing well in 2021 will return. Now, obviously, timing on when that happens is still to be seen. I think you're going to see a little bit more on the employment data and how that shakes out over time, how consumers are still spending over time, and just in general, investors getting comfortable with a lot better, more attractive valuations in growth companies that had, we all saw it and we all potentially participated in those valuations in 2021. Now that they're more favorable, it's obviously, a good thing for investors that saw these companies as strong and not just flyer companies that we're betting on to dive back into those solid companies.